Everyone, and I mean everyone, is expecting an end of year Santa rally. But are we really going to get one, seeing that we already had such a massive rally going into December, one of the most bullish months of the year? This is what we're going to discuss in today's video, guys. We're going to discuss both the bullish and the bearish scenarios for the week and the month ahead. We're also going to discuss, guys, about the expected moves. There's something that I'm seeing and I've been noticing over the last couple of weeks relating to those expected moves that you really need to see. Next, we're also going to discuss, guys, about the VIX. There's something really going on here on the VIX that you really need to see. Next, we're going to discuss about what the top analysts on Wall Street are seeing and are predicting for the end of the year, guys. There's something big going on here that you really need to pay attention to. Then we are going to discuss about the Santa Claus rally. What is this? How can we prepare for it? And is it going to happen in December, guys? This is going to be very interesting, so make sure you pay attention to this. And lastly, we are going to go through the charts and do the technical analysis and the trading setups for the week and the month ahead, guys. This is going to be an action-packed video, so make sure you watch until the end. And as always, guys, if you are new to the channel, please consider subscribing. We do bring out the latest stock market analysis outlook every single Monday morning, and we have a special end of year video that's coming out in a couple of weeks, guys, that will be discussing the takeaways from 2022 and what we should be looking out for 2023. So make sure you subscribe and stay tuned for that. And as always, guys, if you do enjoy the video, please give us a like. It does help us a lot. Now let's start off by discussing the Santa Claus rally. What is this and how can we prepare for it? Well, first of all, let's look at the definition here. So the Santa Claus rally, it's a phenomenon where the stock market makes bigger than usual gains at the end of December and at the beginning of January. In fact, December has been the second best month for the Dow Jones Industrial Average for US 30, going back over 50 years, guys. Okay, so if you look at the chart here, December has one of the best monthly returns going back over 50 years for US 30 and for stocks, for indices in general. Now, if we, why do we need to pay extra attention this year? Well, history shows that during bear markets, the Santa Claus rally effect can be even stronger. During the last 3 sustained bear markets dating back to 1990s, okay, there have been 4 out of 5 holiday seasons with Santa Claus rallies. That's 80% of the time. In other words, if you're not paying attention to the market during the holiday this year, you could be leaving money on the table. However, guys, what they are not telling you is what? We've already had a massive rally already, which means that what? The Santa rally may have already happened. Okay, it doesn't have to happen in December, it can happen before that. And what most analysts are seeing is that we've already had the Santa rally. And if we are going back down here, just as a final thing here on this, is that the market rallies in December roughly 3 out of 4 years. Okay, so 3 out of every 4 years we have a massive rally in December. And look at this, we've had the massive rally over the last 3 years. Okay, 3 out of 4, which means what? The 4th year, 2022, maybe seeing a big crash. We saw that where in 2018, look at that, minus 9.1%, guys, 9.1%. We saw that where, and so in 2002, okay, minus 6%. Okay, and if we go back all the way to 1920s, okay, you'll have seen more of those. Okay, so guys, in terms of the Santa rally, everyone is expecting it. However, I think this year this has already happened. And why is that? What's been happening in the markets over the last couple of weeks, guys? Now we already know this. We had a massive rally. Now if we look at this article here from the Market Watch, is telling us something very interesting, is that the Bank of America is selling, okay, US equities rally on worries that unemployment will be shocking, okay, in 2023. They are preparing us for what? For a recession. Now this article is from a couple of days ago, so it's quite fresh. Now what I want to point your attention to, guys, which is something very, very important here, is that investors withdrew 14.1 billion out of the global equity funds over the past week. It was the biggest weekly outflows in 3 months. Now this has happened when? Last week, with 6.1 billion, okay, of which being withdrawn from exchange traded funds and 8.1 billion from mutual funds. Okay, what is this telling us, guys? It's telling us that smart money, smart investors are doing what? They are taking profits from this rally that we're seeing in the stock markets. They're not putting money to work. They're actually taking money out, leaving what? Retail investors to literally hold the bag. Okay, and that's why you have to be very, very careful. Smart money, okay, the smart investors are selling, okay, and we should be following that. We shouldn't be buying. Okay, make sure you follow this and be very, very careful, guys, because normally when we see such big outflows coming out of the markets, this equates to what? To some massive selling. But this hasn't happened the last week. Why? Because retail traders, okay, have been putting a lot of money to work to compensate for that. Okay, imagine when they start taking money out as well. Okay, then we're gonna get a massive crash, which can happen. Okay, it can happen at any point in December, guys. Now we need to also look at extreme fear, guys. We are getting into extreme greed. Apologies, not extreme fear. We are at 75, which tells us what? There's a lot of greed in the markets, guys. Okay, and what we should be doing when we have a lot of greed? Okay, we should be looking for selling opportunities. Remember, when everyone is buying, okay, we should be looking to sell or selling opportunities. When everyone is fearful, okay, we should be looking for buying opportunities. At this point in time, everyone is of the idea that we'll have a big Santa rally and we are going to all-time highs, and everyone is doing what? Is buying into this rally, guys. It's very, very dangerous. Apologies. And we should be looking for selling opportunities, guys. Now let me show you this. Okay, so this is a chart from a video that we posted a couple of weeks ago, and we said what? We said that every single time, okay, well, the last 2 times, okay, that VIX has reached 35, okay, we had a massive short squeeze. That was during this bear market. Okay, we had what? A bear market rally, and then I cautioned that we may have the same this time, and this is exactly what happened, guys. If we are going back to look at the VIX over here, guys, we've had what? We've had a massive short squeeze in the VIX, and we have a meltdown in the VIX, and we've had a short squeeze in the S&P 500. Can you look at this? Look at this massive move here that we've had over the last couple of weeks. This is exactly, guys, what we predicted. Okay, this is exactly what we predicted over the last couple of weeks. So make sure you always subscribe. You subscribe to our channel if you wanna stay on top of moves like this. Now, check this out. So we've had that short squeeze, okay, in the stock market, and the VIX is back below 20. Now, guys, the VIX is back below 20. Well, exactly where it was here at in August, just before the massive crash in the stock market and the massive melt up in the VIX. Now, can you see that every time the VIX comes to those levels, okay, it has a big pump up, it has a big rally. Okay, so this is not the time to be buying the stock market. You want to buy the stock market when the VIX is high. You don't want to buy the stock market when the VIX is low. So pay attention to this and be very, very careful. Now, can this go even low? Yes, it can. Okay, there's a certain possibility that it can do that. However, guys, okay, there's a strong possibility that we may see some fear coming back into the market, and if that happens, be very, very careful. Okay, the VIX is at around 20. Okay, as it stands. However, when it gets to, if it gets to 15, okay, then that's where we mainly see those big reversals, those big spikes in the VIX. We've seen them here at 20 this year, okay, but if it goes even lower at 15, okay, that is very, very dangerous for the stock market. So be very careful. Now, in terms of what we're seeing here on the VIX, we did open with a big gap here, okay, so we may try to fill the gap before going higher, but that doesn't necessarily have to happen. So be on guard for this, guys. Okay, before I go into the charts, I just want to show you this here. Which is a quote from someone that from one of the top analysts that I like to follow, which says that the initial leg of a new bull market isn't usually powered by the Dow Jones Industrial Average. Historically, high growth stocks and the NASDAQ have led gains, but during this 7-week bounce that we've seen over the last couple of weeks, they have underperformed. The NASDAQ especially has underperformed compared to the US 30. This doesn't happen at the start of a new stock market cycle, as a start of a new bull market, guys, which tells us what? The bottom may not be in, and this is just a bear market rally, which we're going perhaps to, we're coming to the end of it. If we are going to look at this, okay, at prior bear market bottoms, growth stocks and the NASDAQ have led the broad market, okay, where everyone is literally buying into the NASDAQ, okay, and the growth stocks. Interestingly to note that during this rally of mid-October low, growth stocks and the NASDAQ have lagged quite significantly. This suggests that we are witnessing a bear market bounce and nothing else. Okay, guys, so be very careful. Okay, all those people that are telling you that that's it, the bottom is in and we are going to all-time highs, perhaps just be on guard in regards to that, because we may be seeing some more pressure over the next week and over the next coming weeks, guys. So be very careful. If everyone is buying, remember, if everyone is like extreme greed, everyone is literally buying the stock market, we should be looking for selling opportunities. Now, one thing that may cause that selling, guys, okay, is year-end rebalancing. What is that? Okay, so at the end of, guys, let me just put this into context here. At the end of every year, okay, all those big funds and all the mutual funds are doing year-end rebalancing, which means that they are buying the winners. They are buying the winners for the year, and they are selling the losers. Why are they doing that? They are doing that to attract more clients. Okay, the new clients that will come up in January. Okay, they will be like, how have you performed over the last year? And they will be like, well, listen, at the end of the year, we've held the big names that performed very well during the year. Okay, we've had the likes of ExxonMobil, United Health, Johnson & Johnson, Eli Lilly, and so on. Okay, those names have performed very, very well, even though the whole year they've held the losers. Okay, but they're doing this year-end rebalancing just to show that they are holding the big names, just to show that they've done a really good job, where in fact they haven't. Okay, so that's how maybe they trick people into investing with them. Now, they may do a lot of year-end rebalancing, guys, going into year-end. Okay, so they sell the losers and they buy the winners. So that may also cause some of volatility and some of this year-end and perhaps year-end crash, okay, that may add up to it. Okay, it's not going to be just this. We need another catalyst to bring out the stock market. And guys, we have plenty of catalysts. The stock market is going up, which is, it means that the financial conditions are easing. What does it mean? Okay, the Fed doesn't like financial conditions to ease. Why doesn't it like financial conditions to ease? Because when the stock market is rallying, okay, when we have the stock market rallying, everyone is comfortable. Everything is fine. There's no recession. The stock market is fine. So they go out and spend money. And the more money they spend, okay, it helps inflation go up. It doesn't help inflation go down. And remember, the aim of interest rates is to bring inflation down. And if inflation doesn't go down, what do they have to do? They have to keep raising interest rates until inflation eventually goes down. And then eventually we will see a stock market crash, even if it doesn't happen in the next couple of weeks, which I think is unlikely. Okay, it will happen, guys. Okay, it will happen very, very soon. So this is just those people that are saying the Fed will stop raising interest rates, they will have to cut interest rates. If they have to cut interest rates, they will do it for one simple reason, which is what? Because we are in a recession. So we're going from a period of high inflation to a period of recession. I mean, both are negative for the stock market. So what do? Okay, you have to look for selling opportunities, guys. Now let's go back and look at the charts here, and start off by looking at the US 500, guys. And here what I wanted to show you in regards to the expected moves, guys. I've been seeing this over the last couple of weeks, where at the beginning of the week, okay, we go in and we close just below the expected move. Okay, so in this case, the last 2 weeks we've closed, we went below the lower expected move for the week. That was on Monday, Tuesday, and then we rallied to the opposite side of the expected moves. In this case, the upper expected move for the rest of the week, guys. And we've been doing that for the last couple of weeks. We rallied below the lower expected move and then rallied towards the upper expected move. Now, what this is telling us, okay, and obviously we closed within the expected moves, which is what we're expecting anyways. Now, what I want you to monitor over the next week and the next couple of weeks is where we do close up below or above the expected move, the upper expected move, or below the lower expected move. Where we close above or below it and then we don't rally back into it, we keep going in that direction, because that's what causes those unexpected moves, those big crashes or those big rallies. So if this week, okay, and guys, I'm going to give you the updated expected moves in a second. If this week we go above the upper expected move, okay, and then perhaps we go all the way down to the lower expected move, or imagine we go below the lower expected move for the week and then we keep going, okay, that will cause those hedge fund managers to hedge, and that will increase the selling to the downside. So be careful on that. Okay, there's something that has happened. Okay, we may get a move above the upper expected move, and then we go back within the expected moves, and then we go towards the lower expected move. That can also be a possibility for the week. So watch out for that. Or you may be doing what we've done over the last 2 weeks, where we go below the lower expected move and then we rally above, we rally towards the upper expected move and perhaps above it. Now, just wanted to show you, before I go into this analysis, guys, I wanted to show you this article from Bloomberg, which they talk about this year-end rally. Now, you can go and read this article for yourself. But what they are looking for, guys, they are looking at this trend line here on the S&P 500. And they say that a break above 1490, okay, will cause a lot of pain, okay, and we may see a lot of upside. Now, I always talk about fake moves and fake breaks on the stock market, okay, where they induce a lot of buyers. So if you go here, okay, this is the trend line that they are looking at, okay, and we are right at the trend line, guys. We are right at the trend line, and we are where? At the daily IC here. And guys, this is what I've been talking about this for the last couple of weeks, but I wanted price to come into this daily IC here, and I'm going to see some consolidation. As it stands, okay, we are consolidating right at this daily IC, which is probably, you know, it does indicate a nice selling opportunity. However, okay, we may see a fake move, a fake break of this trend line, okay, because everyone is expecting this trend line to hold. We may see a fake move, a fake break, and then straight after that we may see a move back below the trend line and then continue selling. So be on guard on that, okay? As it stands, it provides us with a nice selling opportunity where the price is now. However, we may see a break this trend line, okay? So be on guard to that, guys. What I'm also seeing here is that we may be getting close to getting a sell signal here on the daily, on the MACD, guys. And every time, okay, we had a sell signal, it provided us with a lot of downside. We had this here, okay, back in August, we got a sell signal, massive crash, okay. We've also had a massive signal here in April, okay, a sell signal, and then provided us with a massive crash, guys. So every time we get those sell signals, okay, above the zero line, remember, okay, it provided us with a big downside pressure, okay. We haven't got that yet, but if we do get it, pay attention to it, because this is going to be very, very big, guys. So pay attention to it. Next, let's move on to the UK 100. And guys, on the UK 100 here, we finally we broke above this trend line. Now we broke this trend line here that's been holding us resistance over the last couple of weeks and months. Now what's next? Again, guys, look, we are getting close to getting a sell signal. Every time we had a sell signal above the zero line over the last couple of months, okay, we had massive downside pressure. Sell signal, massive downside pressure, okay. So we are getting close to that, but it hasn't happened yet. So what I'm seeing here, we are at this daily IC here, and we are just consolidating above. What I'm predicting, and what I've been predicting over the last couple of weeks, is a move above to clear all the liquidity that is resting above here. So I wouldn't be surprised for us to get a move above here, clear all the liquidity, and then go and crash it back down, guys. So just watch out for this. In terms of a reversal sign, what are we looking for? We're looking for at the 8-hour time frame. We're looking for the two moving averages, the 20 and the 50 here, to be broken. This has been massive support here, guys, okay, over the last couple of weeks. We want a move below this, okay, so we want to see those two break, and then those act as resistance. That will be the hint, that will be the indication for us to go short. As it stands, this, guys, this looks very bullish, okay. Now I'm not saying, you know, we don't buy, okay, don't participate in this rally. You can participate, but just remember, okay, the upside here is very limited, okay. We are getting very extended here, so we need a pullback, okay. So we need a pullback, and perhaps on the pullback, that's when we want to look for buying opportunities. As it stands, you can play intraday trades, okay, but make sure you have tight stop losses, because any catalyst in the market can cause a quick turn of events and a quick crash, okay, and that can happen at any point, okay, and can take you by surprise. So be very careful on that. Next, we get here the DAX here, and guys, the DAX has been consolidating at this daily, the daily IC over the last couple of weeks or so. I mean, there's literally nothing happened here on the DAX over the last couple of weeks. It's just been literally consolidation and sideways action. Now here we did get a selling opportunities. The MACD has crossed down, giving us a sell signal. However, we are not seeing anything. Remember, guys, when we do get a sell signal, it can mean that we just go sideways for a while and then we go down, or we just go sideways. Now in this instance, we are just going sideways, which is telling us what? They're telling us what? It's literally, I think in my opinion, it's telling us that the upside here is pretty much, it's limited, okay. Now I've been talking about the last couple of weeks about the liquidity that is resting above this level here. So I wouldn't be surprised to see a fake out, move above to clear all the liquidity, and then a move right back, and then start to go back down, guys. We are seeing divergences that are building here. Okay, a MACD sell signal, and it's too many indications here, too many confirmations for shorting. However, the structure looks very, very bullish. So unless we see here, again going back to the 8 hour, we need to see a break of the 20 and the 50 EMA to give us the extra and the definitive confirmation that we are going down. As it stands, this looks very, very bullish, guys, so be very careful for the next move. You can obviously you can play the long part, okay, the bullish side of the argument and go long. Just bear in mind, in my opinion, I think the upside is very much limited. We can still go on, okay, for a week or so, or until the end of the year, but that's very unlikely, so be very, very careful, guys. Next we get US 30, and guys, here on US 30 we've broken the structure. Okay, we are bullish. However, we need some sort of pullback. Okay, we need some sort of pullback, and we'll be discussing the arguments for a pullback at the beginning of the video. Okay, we have a lot of bearish indicators that are telling us that the upside is limited. We already had a massive rally. We need some sort of pullback before we can go and buy again. We are seeing divergences that are building. We are seeing that sell signal, okay, here as well, but we are not getting what we need to get. We are not getting that downside pressure. We need a catalyst for the market to go down. Remember, the smart money has been selling, has been taking money out of the market. Okay, now in terms of what we're seeing here, okay, is the 20 and the 50 again on the 8 hours, guys. That's very, very important. Now, where is the price as it stands? Okay, the price is right into this 4 hour IC here, just hovering below the 4 hour IC. The structure here is bullish. Okay, so we need some sort of break of structure. So perhaps we get a break of structure and a break of those two EMAs, okay, to give us the indication that we're going lower. As it stands, you can see that every time the market has a pullback down, okay, goes back into an IC and then goes higher, goes back into an IC and then goes higher. So you can play it, okay, this way until you see that break of structure. Make sure you have tight stop losses though, okay, be on guard with that. And if we are looking at the daily, okay, perhaps we can rally a bit higher to go into this daily IC here, okay, right around 34,800 or so, where we may see some consolidation and then a big dump from there. As it stands, this is overextended, guys. We're getting into the overextended territory, getting that sell signal as well, so be on guard, be very, very careful. Next, we get the US 100, guys, and on here with the US 100, this is the weakest out of all of them, out of all indices, as we've noticed and as we had the top analyst also explain it to us. This is not participating in the overall rally that we are seeing in the stock market, which seems very fishy. So that's another argument saying that if the big tech are not participating, okay, how much room does it have to go up? Okay, not a lot. Now we are sitting in this daily IC here, okay, and when we have this 4 hour IC here also. Now this again, guys, looks very, very bullish. Can we rally some more? Yes, we can. However, we need to look for this for a close below this level here, below 11,445. For a change of structure. As a moment, this looks very bullish, guys, so don't try to get in front of it, okay, but be very careful. Now, where can we go? Can we go higher? Yes, we can. Okay, we have this daily IC here, guys, sitting at 12,600. Okay, there's plenty of liquidity sitting above, and we have an IPA here as well. So can we go higher? Yes, we can. So there's two ways to play this. Okay, if we see a daily close below this level here, 11,445, 440 or so, okay, then we can assume that we have more downside to come. And if we see a candlestick close above this level here, then we can assume that we are going to fill this IPA and into this this daily IC here, guys. Next, we have the DXY, and guys, the DXY has been crashing and crashing and crashing all over again over the last couple of weeks. What does it tell us? Okay, this tells us that if the dollar doesn't pick up, okay, we may see some more fuel added to this rally. However, we are at a crucial level. We are at this daily IC here, where we are expecting price to have a reaction. We are at the daily IC, we are getting some divergences, and we may be getting possibly a MACD buy signal on the dollar here. Okay, guys, we haven't got it yet, but if we do get it, that will be very, very powerful. So make sure you watch out for this. Okay, in this daily IC, we may get some consolidation here, okay, where we can push higher. However, if we break this level down, okay, then we may get more pressure on the dollar, and we make it more rally, make more fuel for this rally. Where can we go to? Well, I have this weekly IC here, okay, at 103.100 or so, and that will be met by this trend line here, which should be acting as a nice support here. So if we do go lower, okay, then this is where I'm predicting the DXY will perhaps bottom, and then we may see some rally to at least fill this IPA here. Okay, guys, we are at a crucial level here. We are at this 50 EMA here. Okay, so we are stuck between the 20 and the 50. More pressure. Okay, if we do break this to the downside, we have more pressure here. We haven't closed right on it. Okay, and right at the daily IC here, which suggests to us that we may be seeing some relief. Okay, some relief in the dollar over the next coming weeks. And if we do see that, okay, watch out, because the stock market will have a lot of downside pressure, guys. Next, we get gold here, and gold, guys, has been doing what we wanted to do. Okay, we've been rallying over the last couple of weeks, and we are getting close to clearing this liquidity here. Okay, now we are in this daily IC here. Okay, we haven't closed above it, we're still right in here. So unless we see a close above here, I can see us going back down, trying to clear this liquidity, and this overall liquidity sitting at 16,000, okay, 1615 or so. If we do close above this area, guys, then I can see the gold here moving all the way up, clearing all this liquidity and coming into this daily IC here, at least at 1950, guys. There's potential for more gold upside, especially if the DXY doesn't hold those levels that we just discussed. So look out for that, okay? But if we do see a close below this, then I can see us retesting and clearing this liquidity. This is way too clean here, and I can see us clearing that out. We can see that the divergences are building here. So clearly we have more downside. The momentum of the buyer is clearly slowing down here. Next, guys, we got GBPUSD, and as we mentioned before, I was looking for this liquidity area to be cleared, okay, to be grabbed. That's exactly what happened. Okay, so we 100% smashed with this call that we made here on GBPUSD. Now, guys, we are seeing we're getting a bit overextended here, in my opinion. Now we do have this daily IC here that we've been talking about. Okay, so I can see the price. If the dollar doesn't hold those levels, I can see the price going all the way to 1.25 or so, where I expect that will be the ultimate level, okay, where we can short GBPUSD, unless it happens here. Now we've cleared the liquidity, okay, so there's reasons for us to go back down, okay, to at least fill this IPA here and into this IC. So watch out for that, okay, guys. A break below will give us more selling. Okay, and if you close above, then it will just get us to this 1.25 level. Lastly, guys, let's talk about Bitcoin. And guys, Bitcoin, there's literally no liquidity flowing into Bitcoin. Yeah, we've had a massive crash here, clearing this support here, and clearing all the liquidity that was resting above there. And now what we're doing, we're retesting that support that we broke there, nothing else, and we're trying to fill this IPA. So unless we see a close above this level here, okay, above 21,580 or so, then it's more downside pressure for Bitcoin. Okay, however, we're getting some divergences, which means that perhaps the sellers are exhausted at this point, and we may see some more buying pressure. Again, this is in a downtrend, so there's no reasons to be overly bullish on this until we see some real liquidity flowing back into Bitcoin with perhaps some positive news. But as this is heavily correlated with the NASDAQ, as NASDAQ is seeing more pressure, this will not be able to rally by itself. Okay, so monitor this over the last coming weeks. Remember, our ultimate target here is 12,500 or so. This is the ultimate bottom that we are expecting to go long fully on Bitcoin. So let's see if we get that, if we get that in the next couple of weeks. That's pretty much it from me, guys. Thank you very much for watching. If you enjoy our videos and would like to learn more about the trading techniques and strategies that we use, go over to our website mcitradingacademy.co.uk, where you can find out more about the mentoring, one-to-one mentoring courses that we offer. Where you can also join the Discord community, guys. All the way down here, you can join our free Discord community where we post a lot of useful content and also useful trading setups every single day. Thank you very much, guys, and I hope you have a great trading week.